Hi everyone, let's talk about Longeveron. It's a clinical stage biotechnology company that engages in developing cellular therapies for aging-related and life-threatening conditions. Market cap is 55 million. This was pumped up pretty high, so within trading day 180% almost. That is all because of the FDA approves their drug Lomecel B for rare pediatric diseases to threatening life. So there's the drug pipeline. You can read more technical side and in which stage are the follower drugs are in the biopharmacatalyst.com. There's actually 4. They are all on the phase 2. Actually, this one is in phase 1. But anyway, they got approved. The price pumped up. Actually, current market cap is 156 million. So there's like plus 100 million to the market cap. And financial health for 5 out of 6, there's a lot of risks. So basically, they does not have meaningful market cap and the meaningful revenue based on simple Wall Street. So 2 millions in revenue and 56, but okay, currently it's 156. Revenue has declined by 63% over the past year. There's a lot of competitors, but they are all low cap, so not so bad. And there's the price history. So the peak was in the actually July, but before that March. There's the 52-week high, 8.45, decreasing to the $3, actually 2.92. And since they went IPO back in February, it has no 1-year returns. But if we open the max, there's 10% all time. So that is actually beating the US industry, but not the market. Price volatility considered as little higher than the industries. About the company, founded 2014, employees 12 only. Wow. Fundamental summary. So 156 million market cap, revenue 2.28 and earnings minus 14. Valuation side. Unfortunately, in simple Wall Street, neither the two ranks does not have any price targets. But we found on the Market Watch there's $12 per share, so it has even currently a big upside. Even this is 170% up. On the future growth for the industry, 12%. Yeah, so this is bad things. So past performance, last year's earning growth decreased. So they managed to have better profit margin, but it's decreasing. Yeah, there you go. With 2 million in revenue, 14 million in the on the negative side on the earnings, minus 629 profit margin. And of course the company is unprofitable currently. Financial health, they do have a little of debt, 148,000, and cash, yeah, they do have a lot of cash, 18.9 million. So they do have a cash that covers the debt to equity ratio 0.7%. Balance sheet looks green. They're not paying dividends. And of course, insider transactions, yes, there's on the buyer side, there's director, chief executive officer, co-founder, 12th of October brought it. Not a significant of amount, but anyway, actually he brought co-founder, CFO, brought 16. Here you go once again. Director, 1 million brought in February at $10 per share. Ownership breakdown, wow, here's the interesting part. Insiders holding 85%, general public 13%, institutions 1.7%, and there's little on the private companies. Top shareholders. Yeah, so no surprise there. Luckily, there is the Vanguard group that it has on the top 4, increasing 1%. But I see there's only who are increasing. USB Asset Management Private Capital Group, Gorge Capital, Director, increasing a lot. And is this the co-founder? Who is the second co-founder? Is he here? Not sure. But anyway, 23 million holding. And yeah, so Finviz showing that there's a pretty big skyrocketing the candle here. The volumes are getting high. I guess the resistance level were here at 5.55. It broke it, but currently the most probably the price would drop within the next day, as we saw in March, in April, also July. So there is a high possibility that it would drop to the 550. Yeah, and Simple Safe dividends showing that shares outstanding. Look at that, from the 2 million of shares to almost 20 million. Total sales decreasing, so it's pretty risky game. And yeah, as you can see the dynamics here, 1 year if you open that. So those who brought here July were at minus 64 and minus 50 through the basically few months after that. So be careful of the volatility. Try to invest in, first of all, try to invest in the high quality stocks which are on the S&P 500. They are less volatile, but they teach much more of the fundamentals, basics, or it's better to buy low cost funds. And yeah, it will lower a lot of the risks. Anyway, thanks for watching this video. Subscribe to the channel, like the video, and see you in the next one.